Hello, everyone. Welcome back. I hope you had a good break, and welcome to those who are joining us now for the first time. We will go straight into the next session, and I will hand over to Jan Raas from ABN AMRO to introduce the panel speakers and the session. And again, please post your questions that you have to the panelists in the Q&A box. There's also a Google document where you can add more extensive comments or links to any information you want to share, or you can also raise your hand if you want to comment on anything in the session. Okay, over to you, Jan, now.
Hi, welcome to you all. Welcome back. For those who have joined us after the break, I hope you have enjoyed your lunch. To give you a view where I'm at, I'm working from Amsterdam. We hope to have you back someday. The city is scarily empty. Actually, not scarily. It's very quiet and very peaceful. But with tourists, it's a bit more exciting. So we'd love to have you back one day. Today, we're talking about circular economy and the opportunities that exist for financial institutions across the world. That's been generally accepted that actually the real world activity that relates to the circular economy is giving ample opportunity for financial institutions to step up to the plate. And I've shared one picture with you, and then I'll hand over to the panelists. It is in the field of recovery, which is a lot of recycling and waste treatment related activity. It's in the field of optimal use, which is the sharing economy and servitization through products as a service. It's actually the whole world of circular design. We need to rethink our systems and redesign them. Also our products, design them for the circular economy and not for the linear economy. And we need a hell of a lot of IT support, smarter ways of geolocating and putting data to work to create the circular economy. Let me just give you one line on myself. I'm a global sustainability advisor for a mid-sized bank operating mostly in Northwestern Europe called ABN AMRO with a balance sheet of 400 billion euros. And I also am writing for the United Nations Environmental Programme a report titled Demystifying Circular Economy Finance. And today I'm your host, and I have these fantastic guests to introduce to you. So welcome to you all. The panelists are Davina Milenge Uwele from the African Development Bank. She has a role at the African Development Bank, and she is responsible for turning nationally determined contributions under the Climate Agreement of Paris into investment plans for the African economic space. She explores circular economy opportunities in Africa to contribute to stop climate change and also at the same time to improve livelihoods and in the end to end poverty. The working title for her program is African Circular Economy Support Program. She will take us through. The second speaker on the panel is Arnold Verbeek from the European Investment Bank. Arnold works as a senior advisor in the Innovation Finance Advisory Division of the European Investment Bank, and he specializes actually in the access to finance challenges and new and innovative ways of financing circular economy projects and companies. He has worked previously for an innovation think tank for KPMG and as an academic researcher at KU Leuven. So we're very happy to have Arnold on our panel, as Davina. But that's not all. We also have Sumana Manohar from Blackrock, and she is one of the investment managers of the Blackrock Fund, recently launched, themed on a circular economy theme, and they will invest in line with the principles of the circular economy, which aims at minimizing waste by considering the full life cycle of materials and encouraging, in the meantime, reuse and recycling. Besides, before her work at Blackrock, she worked at Goldman Sachs. And finally, we have Anuj Mehta from the Asian Development Bank, so yet another continent in this panel. Very exciting geographical spread we have. And Anuj focuses on finance within the Asian Development Bank, and he has a special focus on private-public partnerships. He has worked on financing the metro rail in Bangalore, on financing elderly healthcare, green finance, blended finance in China. And other than working with the Asia Development Bank, he has worked with PwC, the World Bank. He has advised the Indian Ministry of Finance, and he has actually been an investment banker in the city with JP Morgan Chase London. So without further ado, all panelists will speak to you and have 8 minutes of time. I'll be doing some timekeeping. So without further ado, here is Davina Milenge Uwela from the African Development Bank. Davina, take it away.
Yeah, so thanks, Jan, for the kind introductions, and to welcome to the other panelists. As the African Development Bank, we're happy to be joining the global community on this interesting conversation around circular economy. So in my 8 minutes, I'll try to cover 3 topics. One will be on the incentives for managing waste from the African context. The other one will try to take you through some innovative circular economy activities that we think would be good to promote. And my last one will look into legislation around especially plastic ban legislation. So let me start with waste management, especially around waste that goes to landfills, to incineration. What would be the motivation for the move from making sure waste doesn't end up on unmanaged landfills, which is a common practice in Africa? Just to start with, if you look at waste, especially in the African context, actually only 44% of waste end up in managed landfills. Most of it ends up on the side streets, in the water drainage, and in unmanaged and unsustainable or unsanitary conditions. The other fact is actually 90% of waste, especially in sub-Saharan Africa, is recycled. Only 4% gets recycled. So you can imagine the opportunity there. So in terms of incentives, this even not driven by government policy or even enforcement is the jobs, largely in the informal sector. So there's a whole boom of jobs as collectors, as recyclers, because of that opportunity of waste, volume of waste that is increasing as urbanization increases and of course as population grows. The second one is sources for secondary material, because of that, indeed, recycling movement. And the third most important one is the business opportunity, of course linked with the other 3. To date, studies have shown the estimation for the recycling business opportunity is estimated at about 8 billion. And for us as a bank, we see that as an opportunity in terms of poverty reduction, especially when you look at the whole value chain. And of course, last but not least is eliminating pollution and health and water resource recharge systems. Most of our mega cities are also coastal cities, and so waste normally percolates into the ocean, causing a lot of ocean erosion and of course contaminating of water system inland. And of course in these coronavirus times, when you don't have sufficient water, there is a hygiene problem and higher risks of contamination. And so in terms of, again, as a bank, we look at this whole of society interventions from the whole waste management chain as we design support programs. So let me just quickly point out in terms of innovations. Again, there have been startups that have come up with interesting concepts driven by IT, driven by resource sharing. One, I'll highlight, there are many, but for this time that I'm allocated, I'll highlight one in Nigeria on they're called WeCyclers. It's a startup in the city of Lagos, Nigeria, that goes into low-income communities and collects waste. Now, that they just don't collect waste, they make sure that they give value to the owners of the waste, the recyclable waste. And they give, if you're a household, they now have 20,000 households that are members. So they give you a token that with those points you can buy food. So that whole sustainability chain is a good business model that you have to promote those without even much in terms of direct foreign investment, because most times it's always considered that, oh, we need big financial systems to move this. We've seen that there are opportunities even for small startups to actually use the opportunity or harness the opportunity. There are also some that are in the resource sharing systems. There's one called, again, also in Nigeria, Hello Tractor, but there are many across the continent. But the unfortunate bit, these are mostly in the informal sector, and because they're in the informal sector, they are undocumented, unresourced. And so that's the opportunity that we at the African Development Bank want to harness. My last point, very quickly, is on the policy side of things. There was, and I think when waste management came to the fore in Africa, it was around banning plastic use. Two things have happened with the banning of plastic use. One, there has been some level of enforcement, because one other challenge with waste management legislation is the ability of government to enforce. We've seen in those countries, so for now there are 29 countries that have come up with plastic bans. There's been some level, some indication, some positive indication around reinforcement. And that gives hope that with proper government or political will, the enforcement can be done, as we've seen with countries like Rwanda in banning plastics and coming up with alternatives. As same with Kenya and all these countries that you've seen some move around plastic ban, creating the markets, the opportunities to now have alternative businesses. And the other one is on, and again, as the African Development Bank, we're starting a program on Africa that is called the Africa Circular Economy Support Program, that looks into three things. One, and most important, is to support the legislation, because as a business, an enabling environment is very key. Legislation that will open doors for the transfer of skills and technology and resources to the communities and the markets that require them. So, and the next one is to create an incubation, we are calling them incubation hubs, that will enable us to create that marketplace, if I may call it that way, that enables the devolved market in the business reach out to this new emerging market. For instance, we'll create that hub that if you want to reach Hello Tractor or WeCyclers or the others, you have a platform where you can reach them. And if you're an investor looking for new business expansion opportunities. And then the last one is supporting what is called the Africa Circular Economy Alliance. That is a multi-country network for countries to support each other on the drive, for countries to learn from each other, because we believe with the whole peer learning and peer exchanges, it's easier to drive the shift. Because with circular economy, there's a whole lot of behavioral change and peer learning that comes to play. So I will stop here and we'll be happy to engage, because I believe this should be a conversation. Thank you, Jan.
Thank you for sharing the view from your role at the African Development Bank. We now actually turn to the European Investment Bank, to Arnold Verbeek, who I'll unmute right now, and I'll ask Arnold to take the floor and to present his 8 minutes on behalf of the European Investment Bank. Welcome, Arnold.
Thank you very much, Jan. Hello, everyone. I don't know if you can hear me, but thank you for the kind introduction, Jan. Thank you also for the invitation and the initiative of organizing this conference, which I think is very timely and very relevant. I will try to share my screen, and I will be a bit quicker, being Dutch and speaking a bit faster than maybe the rest of us than 8 minutes, but let's see how far we get. I'll try to share the screen. So maybe a couple of words about the EIB. So the EIB is the lending arm of the European Union, and we have on average, on a, let's say on a yearly basis, looking at 2019, we have lended about 70 billion let's say euros in different projects, and this over four different, let's say, areas: environment, infrastructure, innovation, and SMEs. And just what I wanted to point out of this quite impressive amount. So out of this, I continue, right? So out of this impressive amount is actually about 2.1 billion of financing that has gone to the circular economy over the past 5 years. So that is quite a significant amount. And so we have indeed built up quite some experience over the last 4 or 5 years. What I wanted to show you is actually a little bit on our approach, and then a number of recommendations on how we think that we can even push the transition to the circular economy further forward. This is the approach that we have developed. So we're actually building on 3 interrelated pillars. On the one hand, we have capacity building, which was mentioned also this morning a couple of times. We have finance, obviously, but we also have advisory. And on the capacity building side, what is worth mentioning is the work we are doing with the colleagues in the European Commission, the Circular Economy Finance Support Platform, a complicated term, but a group of experts where we, the EIB, but also the EBRD and other partners are actually coming together and working very closely around a number of areas. And one of these, and I've shown 2 publications that have come out of that quite recently. One is a categorization system for the circular economy, which is a big step forward, I would say, in terms of framing what the circular economy is and showing the different type of projects, the definition of the circular economy, the criteria for behind certain activities in the sense whether they are contributing to the circular economy, and then also a number of methodological, let's say, guidance points on how to interpret some of these categories. So this categorization system, this report, was launched actually 2 weeks ago, and I think it is a very important step forward, and we hope that this report, and we have good indications of that, will feed into the work of what we call the technical expert group, which is a commission-driven forum that will indeed try to come up with a taxonomy of what the circular economy is, so that at least in the financial community, but also outside, we speak the same language, and also we're able to share, let's say, our figures and numbers, and even the risks that we see among these projects, in the same and common way. The second report you see below there is actually a number of recommendations, and I will get to them a bit later on in my presentation to tell you a bit about what we think that is important. The bank's journey in the circular economy started about 5 years ago with the first kind of access to finance study that we published, and this has fed into some of these reports here as well. On the other side, left, going counter-cyclical, is advisory. There we think that advisory has a very important role to play in helping project promoters, but also bank, and you see a few examples on your left side, to really develop their project and make sure that the language they convey to the financiers is of such a nature that they understand each other and that these projects can ultimately be financed. And therefore we have the Innofin program in the bank, which is a joint commission initiative, and we have EIA, which is a hub where project promoters can indeed come with questions, requests for advisory support. Then obviously we have finance, which is the core business of a bank, you would say, where we have in the bank, in the EIB, a number of risk-sharing instruments under FC and Innofin, which allow us to take a little bit more risk than perhaps other partners can do. And in my expertise, this is also quite needed, because some of these circular economy projects and initiatives that we see have a bit of an elevated risk profile, and we can maybe get into that when we discuss in the panel later on some of the questions around this topic. But to give you an example, I think existing financial instruments can do a good job, but I think that and our team, Innovation Finance Advisory, has invested a lot of time into designing and developing new instruments that actually can target particular niches. And one example of that is the European Circular Bioeconomy Fund, which is up and running as we speak, and where the fund manager is trying to close the first funding round to really start financing projects in the bioeconomy sphere, so biological resources, but with a focus and a preference and a priority given to circular economy. So these are the three pillars that we have kind of designed over time, a lot together, of course, with our colleagues at the European Commission. We also gave, of course, input to the action plan, and also the first action plan back several years ago. So in that sense, we believe that these three pillars are quite strong and interrelated, and important to work on all three if we would like to move the circular economy forward. This I will leave in function of time. I may get back to this later in the panel, but what I would like to maybe end with is a number of, let's say, suggestions and recommendations that partially come from the report that we presented and developed with the expert group Finance in March 2019. That contains a set of recommendations for policymakers, project promoters, but also the financial sector. Now, as this session is about finance, focusing on the financial sector, what we believe at the time and still believe is very important is to have a common framework towards the taxonomy. And you see a little tick box, not to suggest that all the work is done in that area, but that mainly actually we have, I think, made a good step forward with this categorization system, where together with, in the background of the expert group, ourselves, EBRD, and also Ellen MacArthur Foundation, I think have come together and developed a very strong document and system, which, as I said, we hope that will feed into the tech group towards the end of the year.
Okay.
When it comes to, do I have a few minutes, Jan, left?
I think we should have, in the interest of time, we should head over to Sumana. If you have one sentence to wrap it up, that will be beautiful. And then we can hand over to Sumana Monahar from Blackrock.
Absolutely. Only one sentence, and that concerns the risks and COVID. I think that our, let's say, capability to analyze risks of linear businesses versus the more circular ones is absolutely key in moving ahead. And I think if it's one thing that the Corona crisis has shown, is the vulnerability that we all have, and especially businesses, to let's say linear business models and risks associated. And perhaps we can come back to that in the panel. Thank you very much.
Thank you so much, Arnold. The questions are actually coming in for the general audience. Thanks for rejoining us after the break. I hope you have a great lunch. We're going to continue with the third speaker from the panel, Sumana Monahar from Blackrock. Sumana, please take it away. And again, your questions are noted. I have them here on a second screen, and we will come back to them for the full panel. And please address your question to the speaker and put his name in your question so we can attribute it accordingly. Thanks a lot. Sumana, the floor is yours.
Thank you, Jan. I hope you can hear me. Just give me a thumbs up if you do. Excellent. So I'm going to repeat a little bit of what the rest of my panelists said, that this is an excellent event and I'm privileged to be here. Thank you so much for doing this. As Jan mentioned in my introduction, I work at Blackrock and I am one of the fund managers of a relatively new fund that we launched at Blackrock in October last year. So it's just been about 6 months. We launched a circular economy dedicated long-term fund with about $20 million in seeding. from the firm, but we are currently open to all investors, whether retail like you and me, or institutional investors like pension funds, private banks, and so on. So where we are maybe a little different from a few other panelists on the current panel and across panels today is that we invest in global companies as long as they are public, i.e. listed on a stock exchange somewhere, right? So some of you may have seen this. Blackrock, which is one of the largest asset managers in the world, at the beginning of this year made a very strong commitment to provide ESG-related investment products and put a stronger emphasis on sustainability. The Circular Economy Fund is part of that effort. And secondly, you already heard about the Ellen MacArthur Foundation a couple of minutes ago. Anyone who's deeply involved in this topic are familiar with the organization. We launched this fund in collaboration with them, and Blackrock also became a global partner of the foundation. So what role does a fund like this have in accelerating the circular economy? Now, from previous experience, I can tell you that when a new topic or a new challenge comes up, it is usually the smaller firms, the startups, the state-funded university labs that tend to be a lot more innovative. Now, they're the ones who come up with solutions, and that's definitely been the case for circular economy as well. However, very often to scale up these solutions, you invariably need large companies to step in, to acquire these companies, to become customers, to give them credibility, to bring them to the mainstream. Right. So to give you an example, I'm sure you've heard of new chemical recycling technologies and solutions, and many of them are initiated by private companies, by innovative entrepreneurs. But you need a large beverages brand to adopt this new material in their packaging and their PET products in order to fund these entrepreneurs, in order to make these solutions go global. So that's why we focus on the public side. So the fund aims to accelerate the circular economy by allocating capital to companies that are either innovating or adopting circular economy principles and products. We also engage with these companies so that they report their circular economy practices and thereby encouraging their competitors to also do so. So our goal is eventually to standardize the circular economy disclosures in a way such that investors, regulators, and customers are able to make educated choices. But look, the primary motive of the fund is to invest in companies with positive exposure to the circular economy because we believe this is an area of growth, because consumers are increasingly making responsible choices, because regulators are increasingly nudging businesses to innovate in this area, and because the economics of a lot of circular economy solutions are becoming much more attractive. Just the sheer size of the number of people on the Zoom meeting today, I think, reinforces my point. So we look for companies where the circular economy is likely to increase their value in the long term so our investors can benefit. The acceleration of circularity as a byproduct is an added bonus. Now, the second part of what I wanted to say is how we actually go ahead identifying these companies and what are the challenges associated with it. As you can probably imagine, it is pretty hard to find out which companies globally have exposure to this broad-ranging topic, right? First of all, I'd like to mention how circular economy has exploded in the last 2 years in my field. Now, when we started working on this fund in early 2018, most companies did not use the terminology, even if they were doing the right things, take back schemes, recycle materials, so on. It was business as usual. They didn't report it specially. Now, cut to 2020, and circular economy has become a buzzword, with every large company claiming to be adhering to its principles. So this risk of greenwashing for us is very huge. We don't want to invest in companies that say that they're doing the right things, but actually aren't. So we need to dig deep into what these companies actually do and if their initiatives are truly significant. Right. The second challenge for us is that circular economy means different things for different industries. Food and beverage companies are front and center when they talk about managing waste. That is very different from a furniture producer. The tech firms adopt circularity in a different way to apparel brands. So we really have to define what we believe is circular for every single subsector in order to be able to apply the rules consistently. Number 3 is reporting standards. I sort of mentioned that as a goal, but even within a specific subsector, every business is different and they report different metrics. So using X% recycled content is very different from X% recyclable content, is very different from X% reusable content. And so it has to, for us, it necessitated bringing together subject matter expertise as well as the fundamental investment expertise, which is why we work together with the Ellen MacArthur Foundation on this. The last 2 points, and I'll cut it after that, is the sectors that we're focused on today. I mentioned that food and beverage for us is front and center. After all, they're big consumers of packaging and their products are also frequently used and disposed. But we're increasingly looking at consumer durables as well, especially sportswear, furniture. The plastic usage in particular is hidden and inherent, but these are very, very important sectors for us. Of course, we look at waste management companies, we look at apparel and fast fashion, tech hardware, I mentioned, and increasingly we're working on industrial companies and batteries and electronic components as well. The last point I'll make is on the coronavirus and the concern that during this crisis and the longer it lasts, sustainability more broadly, but the circular economy itself takes a backseat. Right? I'm sure you're aware that Scotland delayed its deposit collection scheme by a year as of last week. Large coffee shops in the UK, before they were shut down, were no longer accepting reusable coffee cups. In the US, they've banned reusable bags right now because they're considered unhygienic. Recycling rates have fallen across the board. So what does all of this mean? Like, frankly, we need to wait and watch. I'm convinced that the consumer focus on sustainability doesn't go away. I mean, you can see in the midst of all of this, you still see articles on reduced pollution and the waters of Venice being cleaner. I think this crisis will be an example of how citizens, voters, consumers get together, like the mass mobilization needed to solve a global crisis. So if anything, I'm more positive. I can also tell you that investor interest hasn't gone down. Across Blackrock, ESG and sustainable products have been much more resilient in terms of flows during this volatile period. And I'm keen to hear from my fellow presenters that the regulatory focus doesn't go away either. So I'll stop there, but keen to see what the questions are going to be about.
Okay, thank you, Sumana. Great perspective on what it takes to run a fund on behalf of Blackrock, a global investor. And thanks for sharing the perspective on the appetite of investors to continue investing with an ESG lens, even during this crisis. Thank you. Now over to Anush Mehta, again, another continent. So we have had Africa, Europe, the global investor perspective, and now we're switching to Anush's work at the Asia Development Bank. Anush, please take it away.
So hi to everybody from Manila, where it's now 8:35 p.m. in the evening. And I work for the Asian Development Bank. I head a unit within our Southeast Asia department, which is focused on innovation or innovative finance specifically, which I set up about 2 years ago, trying to do things differently within the development finance or the development banking world, and making some headway there, which is very nice. And within that perspective, I'm going to sort of just talk about a couple of things that we've been doing. If you can see the slides, I think the slide that I always start off on in my presentations on Asia is this, and that's really the financing need. And if you look at the top line, which is the you'll see the annual need of $1.3 trillion. Which are needed in Asia. And you see the little number on the right, which is the financing gap, the 459 billion. And that's a nice number because that sort of still includes China. If you strip out China and you start going down to, for example, my region, Southeast Asia, it's the financing need is 157 billion a year, and the financing gap is 102 billion a year. So it's almost sort of equal. And what everybody's been talking about for a long time is to bring in private capital into this area, which is extremely difficult. I myself set up ADB's first PPP initiative back in 2007 in India, And I know how difficult it is to do that. So, so the biggest issue that we are facing, if you're looking at infrastructure and you're looking at green infrastructure, which includes recyclables, it includes the circular economy as a whole, whether you come at it from a green angle or you take it from a recyclable or a circular angle, is simply the cost involved. So, it's nice words, but, when you talk to local governments and you talk to national governments over here in most of Asia, they don't give a damn. So, it's a nice thing, but, when you can't even afford to pay for the water coming through the pipes, forget about treating solid waste and wastewater. So you've got a massive issue in terms of infrastructure, then infrastructure which is climate resilient or green, and then is plugged into basically, sort of ensuring circularity of resources, minimum use, reuse, etc. Huge issue. And sort of the big point over there is revenue. So, Sumana's point on having a fund which invests in these projects is exactly what we need, which is wonderful. But of course, they'll be looking at revenues. They'll be looking at credit ratings. They'll be looking at bankability, which doesn't exist in lots and lots and lots of infrastructure projects in Asia, which is why there's a paucity of pipeline. Now, apart from the revenue model, even if there is a revenue model, projects take off and then they don't happen because of something which is, sort of little regarded, which is land acquisition and environmental clearances. So, right now we're in the midst of an anti-PPP wave. So, because governments say you move too slowly, your contracts are too long. So there's a big issue there. And then there are other issues like political issues and viability gap, funding, et cetera, et cetera. So what we've been trying to do in ADB through this innovation hub, which we set up as an experiment about 2 years ago, and now the rest of the bank is following for other regions, is really what I call 126. And the intention here is that when we lend to a project, we want to leverage our financing, the whole innovation in financing, 3, 4, 5, 6 times. Can we get $6 or $5 from the private sector for a dollar from the public sector or ADB? And this is something that we've been sort of working on for, as I said, about 2 or 3 years. We first started working on it for a facility which I was setting up in China, and we were discussing this with the G20 Green Finance Group headed by then Dr. Majun on behalf of China. And that's when we started focusing on this leverage idea specifically for ADB, which hasn't really been done so far. Now, 3 things that sort of probably worth talking about very quickly. I think as my colleague from the EIB was saying, you just can't finance a project. You need to build the capacity, however much we talk about it, you have to do it. So developing the government's capacities, because at the end of the day, infrastructure, which is what we're talking about, is basically a government function here. You may give it out to the private sector, you may concession it off, but it's a government function and it can be taken back. So capacity, extremely important in terms of innovative finance or green finance. What exactly is a green framework? What is recycling? How does it impact project design? It doesn't exist. You have to do a lot of work on that. We're doing that. Second is converting that into tools and policies. So, I'm working, for example, on an asset recycling model right now for Indonesia. We are trying to develop, a model for an integrated approach to COVID, for example, which talks about health, waste, and sanitation together. And then pilot projects, and then most importantly, these de-risking funds. Now, so we are doing all of this through a technical assistance that's called the Green and Innovative Finance Initiative on the left that finances all these cool things that I'm trying out in different places. And then we've launched what's known as the ACGF, which I'll talk about in a second, and Oceans if I have some time. So if I go very quickly into the ASEAN Catalytic Green Finance Facility, it's supposed to be, I think, one of the first initiatives of its kind in this part of the world, especially. But it's essentially a grouping of countries, which is the ASEAN countries, together trying to focus in on accelerating green infrastructure in ASEAN. Now, what are we trying to do? There are basically 3 green finance vehicles in the world that we looked at when we started structuring this. One is the GCF in Korea. One is the Green Investment Bank, formerly Green Investment Bank of the UK. And then the South African model was also coming up at the same time as us. And we are basically positioned as a de-risking fund. We want the funds run by Sumana and others to come into projects by taking out the risk that they have. So it's a de-risking fund, which we started with an intention, but suddenly morphed into basically now it's a $1.4 billion fund. Everybody you see over there is a partner. So of course, apart from ADB, EIB, AFD, KFW, the government of Korea, and then we have knowledge partners, OECD, etc. We launched this at the finance ministers meeting of ASEAN last year in April and operationalized it since October last year. And that's basically what I am also running as part of my work over here. Now, the couple of things to sort of quickly point out in ACGF. So it's not here just to provide, sort of cheap funding. It's not here to do just project development. It's trying to do a mixture of things. So there is a project preparation part in it. So this is how it works. And if you see the box over here, which is this origination and structuring, we ourselves as a team are going out, identifying projects, developing the green criteria, trying to bring in circularity, trying to create indicators, and at the same time trying to create these life cycle financial models and say, how can we use financing from the fund that I have as little as possible, 10%, 20%. And the pricing is interesting because it's very unusual for a development bank not to have a flat pricing for a government. So this is essentially a dual price structure, which is actually cheaper than ADB for the initial period of 7 years. And the point is that, look, risk is high in the 7 years. We'll take the risk and we'll provide cheaper funding. But after 7 years, when the construction is hopefully finished, surely by now you should be able to catalyze private sector. Therefore, we should be exiting at this point. So instead of creating sort of an exit mechanism, we just change the pricing. So it's a dual price structure, two price. And that's how this is structured. Two-stage pricing, and then it can continue if needed, but it becomes more expensive from year 8 onwards. That's sort of now sort of also being tried out in 2 or 3 other places. So that's
fantastic.
ACGF. We've got
I think we should keep it to that in the interest of time right now. Thank
Sure.
you for your enthusiasm and the very clear presentation.
No worries.
We did have slight cracks on your microphone, but all went well. You were really very well. We could hear you very well, and the explanation was 100% clear. Now I'd like to switch to the questions that have been trickling in, and I have them on the screen to my right-hand side, so I'll just take a quick peek. There was an interesting question. I think Sumana touched upon it, how the COVID scare of the virus is touching upon circular economy activities. But then there was a more generic question, as in, and I read it a little bit, as in, how is resilience against a crisis like COVID improved by switching from a linear to a circular business model? Sumana, could you share some of your insights as an investment manager and your research that you've done on the resilience aspects of the circular economy versus the linear economy?
Sure. Look, number one, I'll say it is pretty early days, so we still have to wait and see if that resilience holds. But I would actually divide that up into 3 parts, which is, does the consumer interest in the circular economy hold? And like I said, it's hard to gauge that right now because currently, say if you walk into a supermarket, I don't see consumers picking up packaging and checking if they are recycled, more sustainable. They're just picking up whatever they can find, right? Is that going to stay true in the next 3 months, 6 months? I don't think so. I really, really hope that consumers revert back to opting for more sustainable options, even if sometimes it comes at a premium. Right, because that is what will incentivize innovators within circular economy to go ahead and take that risk and come up with new innovations. So consumers first, investors second, and as I mentioned towards the end of my 8 minutes, we certainly haven't seen investor interest in the circular economy go down. Like whether it's our fund or broader sustainability funds across Blackrock, like I mentioned, it's definitely been a lot more resilient. The other part, if anything, I can say is this accelerates investor interest in sustainability because ESG investing and sustainability investing and circular economy is part of that is still relatively new. And we were still having conversations with clients trying to nudge them from traditional to sustainable investments. What has happened because of this market volatility is a lot of investors who've taken out funds eventually want to come back in. Now the default option is the sustainable version of the products. So if anything, we think investor interest will come back much more strongly. On the regulatory side, and this is again a wait and watch, I can understand why some expensive policies, programs, deadlines may have been delayed. But I am convinced that a lot of the stimulus, not just here in Europe, but globally, will be targeted towards environmentally friendly areas of growth, and circular economy is part of that. So if you have to boost growth, if you have to stimulate and encourage companies to invest in the future, and if governments now have the choice to choose what those sectors are going to be, I'm convinced it's going to be somewhere on circularity. So it's a question of all three of these parts coming together. We have to wait and watch. I'm not going to claim that this is all done, but I'm convinced that this will be back on the agenda, because when an unknown event like the virus hits for us, it's just human nature for us to forget about the known knowns. And we know the known knowns, which is climate change. We know the known knowns, which is pollution and plastic waste and so on. So once this is resolved, I really hope we go back to business as usual.
Thank you. Very insightful answer. Thanks for sharing. On a personal note, I think the sharing economy as such, which is part of circular economy, will have to reinvent its game, because shared assets will obviously need to be delivered very clean, without any risk of infection. You see that the use of taxis has gone down because of that reason, and I think there's opportunity there for taxis to deliver a squeakingly clean taxi after another customer has used it. Anyway, over to the next question, and that one is for actually, I don't know exactly who it's for, but I'll read it out. I think Arnold could share some insights there. How do you see the lowering of the transaction cost, Arnold, with regard to the non-financial data needed by financial institutions, with regard to the vetting of circular economy finance opportunities? How do you see that lowering of transaction cost happening? And a related question is, does the transaction costs now impede loans to SMEs, because it might be too high for small amounts? Take it away.
Yeah, I think this is a very good point, and actually something that has concerned us for quite a while. I think what needs to be done is to repackage big amounts into smaller ones by using intermediated structures. First of all, I mean, the question I think is fully in line with what we see, because if we look at the big capital intensive projects in circular economy, we all know how to deal with that, that's great. But the new business model driven circular economy type of projects and businesses, they are often in need of smaller capital, starting capital. And therefore, you know, the easiest way to get that capital to them, if we look at the classical system, banks, investors, is either through funds or through intermediated investing loans, like the EIB does. We give amounts to banks, for example, our partners, and they repackage it down into smaller amounts. Funds, I think, is also extremely important. And then I also see fintech. I mean, fintech is also a possibility to actually have a more automated due diligence, smaller amounts, faster distribution to the companies that need the capital. But it is true, transaction cost is an issue, also because the projects, as was said also before in the previous panel, is complicated. It's not a straightforward, in many cases, project.
Thanks, great answer. So opportunities for fintech and innovation and automated due diligence. Great insight. Thank you for sharing. I have a question for Davina. An attendee from the University of Leeds has done research, or the University of Leeds has done research, that recycling itself does not promote the circular economy as much as other activities could. Like in her questions, she mentions dematerialization, reuse, repair, remanufacturing. So since your pitch from the Africa Development Bank was focused on waste management, and we know that is very relevant, like how are you seeing any of the other R's within the circular economy progress within the circular economy program for Africa? Davina, can you share some light on this topic? Davina, can you hear us?
Sorry, I was on mute. Yes, so the program that we are initiating tries to go beyond the entire value chain. So it will work across the recycling economy all the way to the higher end circular economy. But we are starting from where the opportunity is as today, where we have recycling as a core business, because that is where jobs are or the market is at. And so each country, each economy works based on the opportunities they are. And so that is what we are trying to drive at. And that's what the program will do, is we will support an economy-wide, society-wide approach, in that where there is a reuse or refurbish or repackage, any R can fit, as long as the market is ready, the enabling conditions are ready. What we intend to do is we'll create a hub for incubation for any startups that have IT-driven ideas or innovations, that they can find structures, whether they are policy or even financial, to support the innovations and to create the market. And so we are not restricting to one particular R. We are looking into the whole economy-wide approach. Let me reiterate that there are estimates, opportunity estimates in the circular economy, especially in the waste management economy, that looks into technology cost or technology investment opportunities that are between $17 to $120 billion by 2040. So that is a market opportunity for technology developers or whoever that is interested. And for us as a bank, as the African Development Bank, our role is to enable capital owners, the Blackrocks of this world, to move into those markets that are still new and evolving, but with a great potential.
Thank you. Thank you. Great answer. So it's beyond waste, your focus, and you are definitely looking at all the R's within the 9R, 6R, 3R schemes that are underlying to the idea, the concept of circular economy. Great answer. Thanks for sharing your views on the African Development Bank's view. I have a question for Anuj that came in. Can you point us to some examples that have successfully gone through the pipeline where you, with your PPP lens, your private-public participation lens, and how the de-risking actually worked? Can you give a concrete example of a circular economy project that went through and was successfully funded?
Sure. I mean, there are 2 or 3 examples. I'll just quickly talk about 2. Cambodia Solar is probably one of the first projects which has actually gone through, because that tries to integrate energy distribution, transmission with a few downstream things. And that's a project which has already attracted a lot of interest. It's basically a PPP project. It's raised the cheapest, or it's attracted the cheapest tariff bid in Southeast Asia. Really worth looking at that. There's a lot of stuff on the website on that. There is a project in China, which is actually the mother of all of this stuff, which is called the Shandong Green Development Fund. Now, that is exactly what I was talking about, which basically tries to go into wastewater, sanitation, and solid waste management as well. And that creates a sub-fund in Shandong to try to do 2 or 3 different projects, really worth looking at. And then I think the most interesting project which we're working on right now, there are others, but mass transit, wastewater, Manila Bay recycling, but SDG Indonesia 1, really worth looking at. This was launched as at least the concept was launched last year, and we are basically working on 8 sub-projects underneath it, which include renewable energy generation. All this comes on top, but there is wastewater, treatment, reuse, and recycling, which is in Jakarta, and the 2 or 3 other projects. It's just so interesting because it's got a focus on SDGs and indicators, which is governing how money will be used for a particular project rather than simply on construction, but on output. De-risking, there are 2 or 3 different measures that we're using. The simplest is, of course, lowering the blended cost of capital. That's sort of something which works very well. Reduce the cost of capital using our money, which is cheaper, bring in private sector, which is more, can take more risk. But the ones that are slowly coming in 2 or 3 other projects is minimum revenue guarantees and first loss. So minimum revenue guarantee is easier to explain. First loss, especially if an underlying project, which I'm working on now, is trying to do a future bond issuance, more sophisticated, more complex, but that's where we want to go. But the reality is a lot of projects will be blended costs of capital being reduced. I hope we can do more on the first loss going further forward.
Thank you. Thanks for sharing. So guarantees, first loss come in, besides the cheaper pricing of your loans and mixing it with private funding. So very clear answer. Thank you for sharing. Another question came in. Sumana, it is for you. The capitalization of the current Blackrock fund is at 20 million euros, I assume, or GBP, I don't know what.
Yeah.
Dollars, $20 million. That's a fairly limited amount for the size of the Blackrock activity. How do you see it grow? And well, to what level do you expect it to be able to grow in the first phase? And what are any second or third phase expected to be size-wise?
Yeah, so just to clarify, when we do launch funds, this is meant for investors externally to participate as well. So the $20 million in seed funding is what Blackrock does for every single new fund, and we launch a few new funds every single year. To give you a rough idea, the previous sort of longer term thematic funds that were launched in the last couple of years have been able to grow up to 100 to 200 million in the first 12 to 24 months. The reason I would put a big but there is I'm sure you're aware that most global markets are down about 25% in the last 2 months. So this is going to be a very challenging period for us to convince investors to come into any sort of investment product, let alone a circular economy fund. So I'm keeping my fingers crossed in terms of the product being successful. But again, like I said before, if everything holds in terms of the interest levels in circular economy, we hope it performs the same way as some of the other successful funds.
And can you name a number? Sorry, I missed that number. Is there anything you dare to name in a webinar?
Absolutely not. Not.
Okay, but I mean, look, realistically speaking, your game is not in the millions, but can grow into the billions, right?
Absolutely, right.
Yeah.
A place like Blackrock would consider seriously before launching a fund, and our goal very much is to get to the billions, but it's going to be a slow and steady process. Thank you.
Thanks for sharing. There's another question. Actually, I do not know if this has reached the audience. There was a question if the classification of circular economy related activity by the EU, whether that link could be shared, and Arnold Verbeek has shared that on the chat. So you can click the link and download it. I hope this works. There's probably a lot of activity on the chat, so scroll back to find Arnold's contribution based on the question from the audience. So that one's been covered as well. We continue to, I think, what is the last question now, in the interest of time. Is there any global initiative around finance institution cooperation in the near future to push the circular economy? Because we've seen now the African-based program from the Africa Development Bank, the Asian Development Bank having its own program, and some links into the European Investment Bank there. So who would like to take this question: which is the most global initiative for circular economy and finance? Anush, I think you went fairly far in outlining something that went pretty global. Could you repeat some of that and maybe share?
Sure, sure. Yeah, I mean, in terms of, the green fund that we've set up, it is at the moment focused more on Southeast Asia, but it's having a ripple effect. So we've already been contacted by South Asia now to create a similar fund, and Central Asia. So ADB is broken up in that sort of a sphere: Central, Southeast, South Asia, etc. So I already see the development of very similar de-risking funds, which will, especially, sort of promulgate in Asia. You've got this Green Climate Fund, which is essentially a development institution itself set up by the UN. So that is a global fund, which does exist. But it's a little bit easier to talk about regional funds. So ours is one, and the South Africans with the African Development Bank have got something which has been created with Development Bank of South Africa. That's another green fund for the region. So there are things which are emerging in different parts of the world, which are really trying to use funds and skills to try and push projects into this into the circular economy, if you like, to at least help them design better and use the funds better as de-riskers, if you like. So I do see that emerging. And as I said, us doing it, the multilaterals, ADB, EIB, etc., is one thing. But to see a country, so China, there's the provincial fund, and now Indonesia creating an SDG fund. There aren't many funds such as this, other than perhaps there was, I think, one in Denmark created a few years ago. There aren't many. So it's wonderful to see a country itself trying to do a de-risking fund.
And that actually brings us to the end of our session. I want to thank the panel members again, Sumana on behalf of Blackrock, Arnold on behalf of the European Investment Bank, Davina on behalf of the African Development Bank, and Anush on behalf of the Asia Development Bank. Thank you so much for your time and sharing your insights.